With gold prices holding steady above 2,700 US and especially a positive outlook for the coming months and years, it's a perfect time to take a closer look at producing companies in the gold industry. And today with me is Charles Funk. He is the CEO of a company called Heliostar Metals. Charles, you have two producing assets actually in Mexico. One is still in the development phase, and we're very excited to hear all your updates because there has been a lot of news over the past few months and weeks. So thank you very much for taking the time today for this interview.
Yeah, thank you very much for having me. It's a good time to be a gold producer.
Absolutely. And before we head into all the details of Heliostar Metals, let's talk a little bit more about gold. We have had a very good run in 2024, and I personally believe that all the drivers for the gold price are still in place. So I would expect higher gold prices even this year. Maybe we could top the $3,000 mark. But on the other hand, miners, and especially the junior miners, I would count yourself to a little bit more the junior side, they are still lagging behind. I mean, you have done a very good move, but let's talk about the industry in general. You're in contact with all the big guys, all the investors. Give us a little bit of feeling about the sentiment, what's going on in the industry.
Yeah, it's funny how markets rhyme, but everyone feels a bit different. Very clearly on every metric. We are in a bull market. Gold's in a bull market, junior equities are in a bull market, and even majors are in a bull market. But still where we think it should be in terms of the disconnect between how far gold's moved and how far producers and juniors are valued at, there's a massive disconnect. So there's this incredible fear and disbelief of whether it's real. But nonetheless, if you look last year, GDXJ outperformed the S&P. That's a suggestion that people are concerned about the ability to make returns on AI and on tech stocks. And they recognize that commodities, I think, is a cycle that they need to be investing in. And I could think you're right. I think it'll be a continued theme in 2025.
Right, and especially the returns on the tech stocks, right? We have seen it this week. There was quite a bump, right? So maybe that's a heads off for the people to focus a little bit more on hard assets and strategic resources. So let's talk a little bit more about your corporate story. You just restarted your La Colorada project this month, which is very good. That's your second producing asset. Give us a little bit of an idea of the strategy moving forward. You're producing with La Colorada, also with San Agustin. Both are very good mines they have produced in the past, but they are close to the end of mine life, as you would say. So give us an idea, is there an exploration program going forward?
Yeah, so I think the transaction that we did last year on face value was buying mines that were coming to the end of their mine life. We did it because we got an incredible deal and we cancelled money that we owed on Ana Paula. But in 2025, I think it breaks down really simply. The only reason these assets, in my opinion, look like they're coming to the end of the mine life is because they've been underinvested in and or not having the permits to continue to expand. And so that's really been a focus of us in the back half of last year and what we'll deliver this year. So La Colorada, we brought it back into operation and we put out a plan that gives us a 6-year mine life. And so we're in consistent operations at La Colorada. And in the middle of the year, we'll complete the feasibility study that'll allow us to expand it to approximately 50,000 ounce a year of gold production. At San Agustin, we'll continue to produce gold in the care and maintenance phase at this stage. We believe that we'll be back up and running in the second half of the year. We think we'll get the permit to expand San Agustin, and we expect gold production to restart late this year from San Agustin. That's something that we weren't expecting last year. It's a very positive improvement in the framework of permitting in Mexico and has the potential between now and the end of next year of delivering about 40 million in cash flow, a pretty major step forward of the business proposition of Heliostar. And then the third of those is the completion of a study that will allow us to build Ana Paula. Ana Paula, a true flagship, going to be a very high margin mine, we believe, 100,000 ounce a year production. So stabilizing La Colorada, bringing back online San Agustin and taking Ana Paula to a construction decision that we think will drive us to 150,000 ounces a year of annual production.
Very good. And that would make yourself as a mid-tier producer and position you very well in this bull market, if you like. That's very good to hear, but let's talk a little bit more about numbers, right? We talked about the ounces of gold that you want to recover, but give me a little bit of an idea about your cost. What are the all-in sustaining costs on your project? So meaning what is the margin per ounce of gold that you own? And what does your cash position currently look like? Because you have got some money in your bank account.
Correct on both fronts. So we put guidance out last year that we would produce approximately 20,000 gold equivalent ounces, almost exclusively gold ounces, and we do it at between a 1650 and 1750 all-in sustaining cost. We'll shortly provide an update, but we're very well on track for that. We think when we put out the guidance, again, very shortly, that we will continue to expand that. Costs will go up a little bit, not because fundamentally costs are going up, but because we're restarting operations, and that comes with some smaller production with fixed costs. So the true costs remain the same, but I expect the AISC to move up slightly as a function of stopping and starting on these operations. But still, at these gold prices, incredible margin. And that led us, we finished last year with an $8 million cash balance. That's Canadian dollars, $5.5 million US dollars. We were adding close to 2 million a month in November and December to our cash balance. And we paid 2 million of the 5 million bridge loan that we put in place to acquire the assets. And we expect to fully pay down that bridge loan in the first quarter this year. So clearly at these gold prices, no gold company in the history of the world other than the last couple of years has had $800, $900, $1,000 margin projects. It's an incredible time to be a gold producer that we haven't experienced in the history of the world.
Absolutely. Thank you very much. That's very good to know. So, Charles, when I'm investing into a company, I'm always looking at the CEO, right? One thing is he investing his own money? We can talk about this later. But what are you doing with the company money? Meaning you're making cash now, and you will probably make some more cash over the next few months and years. What is your strategy going forward with the cash that you are generating? Is it all in your Ana Paula project? Are you expecting to acquire some more projects? Will you focus on Mexico? Are you going to pay dividends? Give us a little bit of an idea that could be a potential outcome in the future for an investor.
Yeah, let's break our strategy down into short term and long term. In the short term, we're reinvesting the profits that we're making back into the business. That's predominantly at Ana Paula, but we also have 5 drill rigs turning right now at La Colorada. We believe that there's shallow ounces there that we could have on the leach pad or turned into gold in the next 12 months. A great return on investment for our shareholders. So a focus on investing in Ana Paula, but continued investment in La Colorada and San Agustin. As I said, there was no tax shelter in Mexico when we bought these assets because they've always made money. Just unfortunately for them, those profits were sent to try and build a mine in Canada. That didn't work out for the previous operator. The Mexican assets have always made money. They're making money for us, but they never got to see the benefits of the reinvestment of their profits. So we're committed to reinvesting those profits back into Mexico to extend the mine lives of our operating assets and to bring Ana Paula online. And that'll be a real driver for the next 12 months. In the bigger picture, we want to grow to be a 500,000 ounce a year gold producer. That's going to require continued organic growth and likely M&A. At the moment, that's not our priority, but do expect to see the company to continue to grow to achieve that goal of building a multi-billion-dollar business.
Very good, very good. Let's talk a little bit more about Ana Paula, right? It's your flagship project, and I think last time you named it your crown, your veil of your portfolio. So give me a little bit of a rundown. We're currently in the development stage, right? You said you're expecting to do your feasibility study soon. Give the investors a little bit of an idea what kind of work is needed, how long will everything take until we can see the crown, your veil, as you call it, into a more finalized stage.
Yeah, so we bought a project that it was permitted for an open pit mine that everyone believed was going to go down that path. And we took the view that it makes more money and it costs less to build it as an underground because it has a spectacular high-grade core to the deposit. I'm talking about a body of gold mineralization 60 meters wide and going nearly 5.5 grams per ton gold. And the power of that is what it does for your economics. It means you've got a relatively low cost upfront mine that can produce at a significant rate for an underground and can have significant margin. Those grades today are probably worth over $500 a tonne, and we're talking about mining it for $100, $110 a tonne. So the margin that Ana Paula can make is it will be in one of the very of the best gold ore bodies in the world, in my opinion. And so we're looking forward to showing that feasibility study at the end of this year to show a spectacular cash engine coming from wide, high-grade mineralisation. And when I say high-grade mineralisation, in December we drilled a hole of nearly 90 metres at over 16 grams per tonne. We can, we regularly drill 50 to 100 metre intercepts at between 5 and 10 grams. That's what separates Ana Paula, the width, the consistency, and the grade. And so we'll complete the feasibility study this year. That'll allow us to make a construction decision. I suspect it'll be on the order of 200 to 250 million of capital. And so by 2027, we believe we'll be online producing around 100,000 ounces a year.
Very good. Let's, in the end, Charles, talk a little bit more about the shareholder structure and the company, right? You've got, for example, Eric Sprott with you. He's very well known. He is a $1 billion investor in the space. You also got Franklin Templeton with you on your share registry. Those are two major shareholders of your company. Give us an idea who else is with you, and how about yourself? You said you want to buy shares on a regular base on the market. Are you still doing that?
Yeah, so starting with the shareholders, we're very fortunate to have some shareholders who share our vision of building this business. Eric, the more I talk to Eric recently, the more he wants exposure to this gold price because he sees a huge disconnect between equity values and the price that we're getting for selling our commodities. Franklin Templeton, real company supporting, company building supporter. We also have the likes of Adrian Day Asset Management and Phoenix Gold Fund for a European-based fund who have been long-term supporters, and a number of other funds sitting in that 4 to 7% range. Strong gold funds that have been very supportive as we built this business. Probably in reality came down to much smaller market caps than they typically would to support us in our initial steps. And now we're starting to deliver on some of those promises of building a much larger scale business. In terms of my shareholding, I like what I've seen a couple of CEOs of a couple of companies do it, most notably Doug Ramshaw recently, where that view when a CEO just buys a bit of stock 1 month and does nothing for 6 months. I think how do you track that or what that means? What I've committed to do over the last 2 years is I buy stock at the start of every month, unless there's a reason that I cannot do that. And then if so, I make up for it later. So I've bought approximately $2,500 worth of Heliostar stock every month for 2 years. I like the message that sends. I think I can make a lot of money out of my Heliostar shareholding. I clearly don't own enough of the company given what we want to achieve. And so I like that consistent purchasing. Board and management owns about 5% of Heliostar. We did own about 25 before we took the big swing to take these assets. But we've consistently invested in our future. And you'll see nearly all of senior management have bought stock on the market to invest and buy into the future of what we're building at Heliostar.
Very good. And so far, you have made a very good decision because your share price moved up quite good in 2024. That's very good. And also, I think that's very important for the listeners to know, right? We also want to give a little bit of education. You have a really big advantage having all those, let's say, larger shareholders on those funds on your share registry, because those are, in most cases, long-term shareholders, meaning they help you to build the company. They are not dumping the stock. They are not taking some profits because they have to. They know the vision, and they know that's very important. They know the possibility that can come with a company and the opportunities like yours. So that really supports the market and also, I think, the share price in general. So that's a very attractive point for the shareholders and for the retailers to join this journey. Maybe for the end, Charles, give us a little bit of an idea. Is there anything we haven't talked about? And the second thing would be, what would be your main reasons, or your 3 main reasons for a retailer to join the journey right now?
Yeah, so I think we've touched on the key pieces. I think the main reason to buy Heliostar share is if we deliver what we've talked through this year, we think we'll be a much more valuable company. We're doing it with minimal dilution, no dilution to run our ordinary business, and very small capital steps to expand production. That's an incredibly unique opportunity in this space. we're a very catalyst-rich company. We'll have our guidance shortly. We have drill results from both La Colorada and Ana Paula pending. We believe that we'll be in a position to pay back the debt in Q1, which I think will be a very positive message, as well as demonstrating quarterly production and profit numbers throughout the year. So a lot of major deliverables, a lot of key production growth steps. And I think the thing that hasn't been spoken about much or the most about this is all of our projects that we talked about have open resources. As we move from underinvested mines to certainty and stability going forward, we can start to deploy capital and actually show that these assets have a lot longer mine life than anyone believed they did. And at this gold price, an incredibly profitable longer mine life. So watch out for surprises on growth, underground potential under La Colorada, the potential for more oxide and potentially sulfides at San Agustin, and a bigger Ana Paula. The more meters we drill at Ana Paula, the more gold we seem to be finding. So look for us to deliver on the key production steps to re-rate the company, and then maybe as a little cherry on top or a surprise, resource growth as we continue to unlock the portfolio.
Very good, Charles. Thank you so much for summarizing the story. I think you really got the message on point, and we wish you the best of luck for this year, and we talk again soon. Thank you very much for your time.
Thank you so much.